Hello guys, it's BA here, and it's Thursday evening, December 15th, 2016, and I wanted to take a little bit of time here just to give you a quick market update and status of one of my trades that finally closed out today, the crude strangle. So we'll talk about that a little bit, and that's really the whole point of this evening's brief. So we'll just hit the markets real quick, and then we'll go right into the crude strangle that I've been nursing and nurturing for the last 55 days. Um, Another update today, guys. They rallied them up and pulled them up. I think one point I looked, we were up 12 or 13, something like that. And then they sold them back off at the end of the day. So, hey guys, this is when I say a typical December is what I'm looking for. When I say that, what I'm looking for is a rally into this triple witching option expiration. That's the most reliable pattern that you can get in the stock market. It has been ever since I've been watching it. It's shortchanged us the last 2 years. This year it's playing out. Now, what I want to make sure you understand is the whatever it's gone up to the 270 straight up points it's gone up since November 7th. Yeah, that's not normal. But the run up this week, the melt up leading into this week, that's typically what you expect in December. So this month so far has been right on cue, or this week so far has been. Yeah, there's nothing normal about what's happened over the past 5 weeks, though, in this market. Absolutely nothing normal. All the markets are very aberrational now. And guys, just so you know, they're going to continue to be aberrational until this stuff unwinds, until they flush all of these excesses, all these artificially induced control measures that have been placed out. They've got to get washed out. I mean, they always have to get washed out, and this time won't be any different. We just don't know what's going to start it. So anyway, S&P's tracking right along, and again, you see our levels are not in jeopardy. I don't think any of them will be touched this week. So let's take a look at the Dow. Of course, the Dow is just on the run of its lifetime since November 7th. Just one of the just an incredible move up for the Dow. Nasdaq, man, I got to tell you, that chart looks really bullish right there. It looks like it's ready to launch into the stratosphere. I don't know if it is or not, but that's a very bullish pattern right here, guys. That huge bar up, three little tight-bodied candles. Hey, it wouldn't surprise me if this thing ran up really strong into tomorrow's close. Tomorrow's option expiration, guys. Hey, they'll goose them up into the open. That's typical play for a Friday expiration on a triple witching day. So there's just a lot of fundamental reasons why the markets are so bullish going into these periods, and it has to do with the unwind that everybody has to take care of, where they're buying stock to equal out normalize their positions with all the derivatives they have on. So it's just one of the bullish time periods you can expect. Let's see what we have for the Russell. Russell's showing a little bit of cracks relative to the other market. I think that's a good thing. I would really be worried if they're all shooting straight up, pointed straight up. So, but the Russell's showing a little bit of a pullback right now. So, I've got my fingers crossed that the next 2 weeks in this month are another history book entry, which is a complete and utter collapse. I would love to see that. Hey, the dollar. I don't know if anybody expected that huge up move in the dollar yesterday, but oh my gosh, that was a monster run. Just a huge run up, and not a bad move up today either. So I've looked at a few things for Carl, and I got to tell you, it just looks like, according to my models, that we should see some topping action here. This thing is there's divergences just all over everywhere, and it wouldn't surprise me to see the thing stall out and then turn back down for a little bit from here. I know that doesn't help you very much if you're short these things. I'm not going to talk about any new trades, but I did get into 2 trades the other day. I put a trade on betting on increased volatility, put it on in the VIX. I think I talked about that trade, what I was trying to get on, how I was structuring it. I'm fairly certain I did. And then I got into the gold trade. Of course, gold has just completely fell out of bed. The gold has rallied since the dollar has rallied strongly. So, excuse me. So that's why gold is down. Dollar's up very strong. What else? The bond market. I'll tell you, man, the bonds didn't do anything. I mean, you looking at this chart, you wouldn't even know they made an interest rate announcement yesterday. But I have to tell you, the bond market is acting like the bond market did in the old days. Look back here, guys, from this high. You know, the really smart guys figured it out somewhere right in here, which I've always considered the bond market much smarter than the stock market. You know, minus the lunacy that we've seen. And I don't think that was smart money buying. I have to clarify that. There was some stupid money going into our interest rate markets I think since 2012. Just stupid money going into these things, bidding these bond prices up and yields down. So at some point in time, they figured out what was going to happen. And the bond market already had their collapse. So there was nothing for it to do down here whenever the interest rate decision was announced. I think, it's just my speculation, that the smart money knew right in this area, right in here, what was going to take place. And that's when we saw the collapse there. I think that was smart money in the bond market, which always exists, makes its move before the announcement. So, because you can see right here, what did it do? It just wiggled a little bit. Yeah, that was nothing. Anyway, that's just my speculative thoughts on that right there. Nothing to back that up on whatsoever. Just years of watching this stuff. I want to take a look. I haven't looked at the notes in a while. Yeah, notes had a little bit of a move now. So notes were a little sensitive. I don't know what's up with that, but yeah, our 10-year, like I've mentioned many times before, our 10-year is it's really the interest rate that's tied to everything. So again, this is the same area I was pointing out on the 30-year bonds. Of course, anybody that trades the bond market or in the treasury note market is too. These are huge markets, guys. And, smart money figured it out. But there were still a few smarter folks, it looks like, in this area here. All right, enough of the market stuff. All right, let's look at the crude trade, guys. I just want to show you, just to give you an overview. I was in this trade for 55 days. It was by far the worst trade I think I have ever been in, as far as a trade that I was able to stay with and not have to roll a position. I have never seen been in a market, in a trade that moved had so many 20% moves in opposite directions. There's such a thing as a two-sided market, but that was not two-sided, guys. That was excessive volatility. We had periods where the market just fell out of bed, rallied strongly based on rumors. Then we get Putin comments. We have an election that we're dealing with. We have an OPEC meeting, then we have non-OPEC countries that agree to things that we know they're not going to agree to. We just had, I mean, just incredible move after move in this market right here. And it was really tough to stay with. I traded two accounts, virtually the same. The Iron Condor in the smaller account, and I had my Strangle going in my personal account. So I was making adjustments along about the same time. That they were about, just because you have Iron Condor and a Strangle on it, the adjustments are roughly the same. So I'm going to walk you through quickly the steps of what I did. But this is just an incredible chart. So this is where I started my trade, right here. That was it. Straight down. Huge up move, which almost took it right back to where I entered, but I had already made a correction at that point. Huge move back down, and these are just a couple of day moves, guys. And then we get the Putin comment. Of course, the election's back here. We get the Putin comment. You know, a 6+, almost 7% or larger move one day. It continues. We go back up, test. It rallies back up again. So you're talking from 44 and some change all the way up to 52 in what, 5 days? It's unbelievable. Settles back into a range. And then what happens? Then we get the comment. Then we get the non-OPEC nations who claim that they're going to. Oh, you know, I might have mistook the Putin comment was one of the other spots. Anyway, we had a Putin comment. The OPEC countries making an agreement to work together, and then we had non-OPEC, which shot it up at the open on Sunday night, and that was what really undid it for me. I was with this trade positioned beautifully with 3 days to go. And that move Sunday night, just, it did the trade in. It put it in a position to where if it would have stayed in this range right here, you know, we'll call it 53.50 down to, say, 52, yeah, I would have been a champ. But fate doesn't have that. It doesn't quite work that way in the crude market, guys. So let me step through this thing just to show you some of the things I did. Okay, here is the, let's do this right here so we can see a little better. There we go. How's that? I don't know if you guys, see, that's a problem I have whenever I am, whenever I put this thing on. Yeah, whenever I put the PowerPoint slide on a slide viewer, then I lose my cursor and I lose my camera. So, but anyway, I'm going to blow it up just so you guys can see this. And you can see right here where I initiated the trade. I can't point to it. I don't think you can see that. So that's where I put the trade on. I made my first adjustment down here around 46. That was where I planned to make the adjustment at. So from first decision point and first adjustment, I went all the way through without making another adjustment until November 11th. It was now I had added to the position down on election day. I had sold a lot of puts down around the 37, 38 price range. So down there around the election night was when I was selling 37, 38 puts. So I added to it then. Now on November 11th, you'll see that was my second decision point. I was going to have to make a decision at 42. Had to, mechanical. I have no opinion about the crude market whatsoever. I cannot afford to let crude get away from me. This is one market where you just cannot sit back and let it get away from you. I have no problems riding through a huge drawdown in this thing, um, but I'm not going to sit back like I do in the S&P and let this thing get $10 on the other side of me. You can't do it. You have no idea where it's going to stop. So you got to keep making those incremental changes. So that's what I'd planned on doing if it touched 42. Lo and behold, option guys were with me, went to 42.20 and reversed. And we all know what happened when it reversed. It shot. You can see where my second decision point was, and then it rallied strongly. Yeah, that green bar you see after my decision point, that's where I made the decision that if it touches 42, I will make an adjustment. Next bar, it went down to 42.20 and then rallied. So then we had the straight up rally, which took us up to 49 and some change. And I'm going to switch back because you guys can see right here where it rallies up, pulls back down into November 28, November 29, and then we get that huge 6 to 7.5% run up. That huge, really large candle, large bar up after that. The next day, I'm at another decision point. So do I sell puts or do I not? All right, let's switch back to the regular chart again. I'm going to do that. Okay, yeah, I'm back now, guys. All right, so this is the point where I was going to make another decision. At I think I'd have to refer back there. I think my decision was at 53, either 52.50 or 53. Well, again, the grace of God, it went up to within, if I remember correctly, within 25 cents this time and reversed and went back down. All right, I was good at that point, in fine shape with a week to go in this trade. I mean, beautiful shape. In both accounts, the iron condor and my strangle. And then we rally up. And I don't know if you guys remember, but we were setting on support right there last week. And I said, man, this thing really looks bullish right here. I was worried going into the weekend, knowing that there was a potential report coming out. But nevertheless, I didn't make any adjustments because I know how Crude is. Hey, I don't really know how this market's going to react to news. So Sunday night, we open up and we shoot straight up to 54 and some change. I think we go to 54. We don't hit 54.40 until later that night. Yeah, that was past my decision point. It was through my decision point. And unfortunately, with 3-4 days left to go in the trade, again, you have to be mechanical. You can't wait. I thought that was a bogus move up. I don't know. Hey guys, I'll be the first to tell you, I don't have a good feel for the crude market, but I also know how big of liars these guys are and how this market reacts initially to what they say and then pulls back or makes a counter trend move right after right after they run it up and get their prices out of it. So unfortunately, I had to adjust. That completely derailed my trade structure. I had to sell puts. I had to sell them close. I didn't sell a lot, but I sold enough to where if the market would reverse, I wouldn't have too many options to counter that, guys. That was it. So when you get within 3 days, you got to make a decision that and this is the decision of what I was looking at, trying to contemplate. Number one, do I fight it or do I roll it? I mean, that's it. I knew Crude had me on the ropes. I knew it was not going to go my way. It never does. I haven't been through an expiration cycle yet in crude market that has gone my way. Not one yet. So I did not expect this one. So I started making plans for what I was going to do. I went ahead and restructured my trade a little bit, knowing what not knowing anything, but making uh, the probability that it was going to go against me, meaning a down move. And so I started readjusting the portfolio just in case. And thank goodness I did. But hey, guys, it's just not enough. We had that huge down move. I mean, who would have thought that crude market would have moved more than any other market, on an interest rate hike that was already telegraphed? I mean, who would have thunk it? So anyway, trade structure did me in. Um, I made money on the trade, guys. 55 days in the trade, and I made 1,800 lousy dollars on it. I mean, unbelievable. After commissions, I probably eked out a little over 1,650. So I guess I should be grateful that I actually made a profit on the trade. But I got to tell you, I hate looking back at those trades in them so long, knowing that I could have just played my S&P game and chip shotted this thing and been way ahead of 55 days into one of the most volatile markets that I've traded in a long time, for two-sided moves going like that. Um, anyway, I am grateful that it at least turned out on the green side, but you know, and I'm not even going to tell you how many calls I sold yesterday. To um, I bought a lot of puts and sold a lot of calls yesterday to get this thing on the plus side. Um, so I pretty much just when the market's got you against the ropes, um, I have a tendency to how much buying power do I have? Oh, how much will I have if I buy a lot of junky puts against this thing? Oh, I've got that much more. I'm all in. So I sold as many calls as I had buying power in the market. Again, I'm not going to tell you how many I sold, but it was a lot. And that was just to get me in the green for today. So, hey, that was the anatomy of my trade. A very volatile market. If any of you guys stuck in there and you did okay with it, hey, my hat's off to you. That was one of the toughest markets to trade I've traded in a very long time. Um, what made it tough, and I'll close with this, was the number of times that they pumped up premium in this market. It never gave us a chance, never once gave us a chance to to let the theta settle down in this thing. It continued for 55 days. I mean, we were either moving extreme moves in a short period of time, or they were pumping premium in like crazy. So you had no time. It never breathed. Um, hey, I put a trade on last week and was in it, um, a day, I think, and I pulled $1,000 out of it. I was in this lousy trade for 55 and pulled 1,600 out. Um, yeah, you gotta take what the market gives you. I don't want to sound like I've got sour grapes, but you got to take what the market gives you. And this was a very rough market trade here. So we're still in the green for crude. Haven't had a losing trade yet. And personal account, I did chalk up a losing trade in the small account. That's the first losing trade we've had in that one. So, and I'll show you those results tomorrow night or Saturday. So anyway, that's how we ended up in the crude trade. I hope those adjustments that I made are showing you where the decision points were. I hope that kind of helps you out, show you how I think about the crude trade, because I do think about it differently than I do the S&Ps. Um, and the only thing I know how to do is try to stay mechanical when I trade this thing. So we're going to get some good times in the crude market. The past 55 days have been brutal. And honestly, if you look at the prior 45 days, they were just not as bad, but they were pretty bad. We had straight up, straight down moves. I mean, I remember Mike. Mike was in a really tough trade. I think one other, if I can remember, somebody else was in a tough spot in a trade, prior to, somewhere around this area right here. Somebody was in trouble, I think, back in the lows back here. So, hey, it's just been a really rough time trading crude. It depends on where you're at in the trade. So, or where you put your trade on is how well you end up. That's luck of the draw right there, guys. That is all that is. That's why I say I really like putting strangles on in mid range. When these things get down, I was a little bit early right here. Honestly, I was. Um, but I I can't say that I would have waited if I had the same opportunity again. I know I probably wouldn't, but that was early. Another bar or two, this bar right here, somewhere in this range would have been perfect. But you just never know if you're going to get that or not. So anyway, guys, that's all I wanted to cover tonight. Some trade adjustment stuff. Quick look at the markets, and hey, S&Ps are up 25 cents. Nasdaq's down 25. Dow's up 15 points. Just go ahead and buy them right now. They're going to be higher in the morning. Buy you 10, 15, 20 S&P futures. Ring the bell. Take a day off from your normal job tomorrow. Okay. That's the name of the game. That's all you have to do in this market right here. So, and I really hate it. I really do. So anyway, guys, have a good evening, and this is BA signing out.